By the time you're watching this, Wall Street might not exist anymore. So I want to make sure that we get on this as fast as we can. A lot's been going on with GameStop and short calls or something else financial. Anyway, gamers are up to something and I want to understand it. So we decided to reach out to our financial expert, the Minister of Stockery, Dan Evans, host of the Power Report, host of Audio Face Podcast, and longtime friend of the show, used to be on the show. How's it going, Dan?
Always great to be with you, John. I could not think of a better way to spend my time than talking to John Iadarola, one of my favorite people on earth, about stonks, baby. Always goes up, woo woo.
To the moon. Okay, so for people who might not understand this, not me, somebody, basically what has been going on over the past couple days?
Right, so a lot of the main hubbub has been around GameStop stock. Now, it's usually these stocks, if they go up, they go down. That's kind of the gist of it. But there were some interesting things happening with GameStop stock specifically, which led to a Reddit forum called Wall Street Bets. Wall Street Bets is kind of ridiculous. It's known for kind of just like a bunch of tomfoolery, essentially. But they essentially found out through some pretty easy to understand, or like easy to find out, like they're publicly available information about who was shorting GameStop, basically to get rid of the financial jargon, who had invested in the idea that GameStop stock was going to continue to go down. They were failing, losing out to companies like Amazon and Target, yet another casualty of the COVID-19 pandemic on the economy, right? But not to these bettors who they're known for doing wild things, and most of these things are ridiculous, but they all got together to, in a semi-coordinated fashion, coordinate so that the stock price of GameStop would shoot up to these ridiculous levels. I think it's now at $300 right now. A while ago, it was barely at like 30 or 50 from a couple days ago. And what that does for the short sellers is that it puts them in a position to where, because of the contract they made betting for the stock to go down, because it's going up, they're responsible for the amount of price it's gone up for. And we don't really feel sympathy for these people, because the people who are betting on GameStop stock to go down are hedge fund managers. This is what they do. They bet on companies to fail. They put their fingers on the lever with the millions and billions of dollars they have in their investment bank, in their investment funds. And they're just kind of off to the races with it. So long story short, this is like a true Robin Hood story where the people who usually do the screwing over are getting screwed over. So it's fun for all involved. And even a regular Joe can make a couple bucks off of it.
And sort of perfectly appropriately, many of the people are doing this on Robinhood, the app. And I think is it Melvin is the hedge fund that might have lost billions of dollars as a result of this?
Yeah,
but was almost instantly bailed out.
Yeah, it's Melvin Capital. And this is hedge funds. All of this jargon can get really complicated, but all you need to know about hedge funds, they're similar to venture capital funds, which we've talked about. Mitt Romney used to run a prominent venture capital fund, Bain Capital, and they're a good example because they're often called vulture capital funds, because what they often do is they buy up distressed assets, companies that are about to go out of business, like Bain Capital did with KB Toys and Toys R Us. They sell it off for whatever is reasonable, the real estate that the stores had, the pension plans that the employees of Toys R Us were depending on, and then they liquidate the assets. They sell everything, they fire the employees, and they make off with their check. They're very clearly about to do the same thing with GameStop, but literally just a bunch of Redditors bored at home waiting for Biden to get those $2,000/ $1,400/ like $8 in Disney Plus stimulus checks. Like, these people are just kind of taking matters in their own hands, and it's really economically savvy. I don't think this will happen many, many times because it's a complicated sort of trick they pulled. But again, just as a socialist Marxist economist, it's very funny to watch.
Yeah, and making it a little bit more difficult for them to do this is that all of the most powerful people in America have been coordinating over the last day to stop it. Literally stopping trading on particular stocks, which I guess they can do. Like TD Ameritrade's like, no, you can't trade that stock right now because you're doing bad things, which is amazing in the supposed free market where stocks go up and go down, as you said. That's the way it's supposed to work. But really fast, obviously many people watching this are not gonna be like surprised to find out that we have a negative view of hedge funds in general. But specifically in this area, you laid out what they do when they sort of pick over the bones of these companies. But when they stake out a position like with GameStop, where they short it basically, and they say it's gonna go down, that does send signals to other potential investors, right? Doesn't that sort of pollute them from wanting to put money in these companies and sort of puts downward pressure on the stock price that few are gonna wanna bet against a company of this size that seems to believe it knows what's gonna happen?
Well, yeah, I think that's true, John. There is a case where there's some risk after this. Of course, if it's happened once, it's happened again, if I think I understand the idea of your question. Whereas like these kind of short bets may now seem extra risky, knowing that if it's a popular company like AMC Theaters, Blockbuster, or a couple of other ones that have gone up in a couple hours lately. But the sort of thing, I think one of our mutual friends, Jordan, put it well. It's kind of like an old stock kind of trading adage, is that you want to buy the rumor and sell the news, because once it's already a big sort of news hubbub, everyone's getting into it. Even people who are barely interested in Robinhood or haven't touched the app in months are like, oh, maybe I should get in on this. It's already too late. These markets move very quickly, and so it's unlikely to happen again. As you kind of alluded to earlier, there's now this whole regulatory push that, oh, we can't get you the $2,000 checks immediately. We can definitely prevent you from doing financial tomfoolery immediately. We'll stop that for sure.
Immediately.
Yeah, there's absolutely a push for that. But I think the other thing we're kind of watching out for here is that hedge funds get away with this every single day. They're getting away with it today. They're gonna get away with it tomorrow. They're gonna continue to do it because this is endemic of our economic system that is very out of touch with the real lives of what people are doing. Like I remember seeing a chart maybe a couple days ago, but that depending on by state, between 21 and 41% of tenants in every single state are basically at risk of being evicted or past due on rent because of this crisis, and we're not really affecting that. Meanwhile, these hedge fund managers are playing with millions and billions of dollars, treating these long established companies. Maybe you don't have sympathy for GameStop, but they're treating these companies like bets, like card game. It's really just a game to them. And so I think the more people understand that a lot of our economic dogma is really just a game for rich people, the less we get pulled back by arguments that are gonna come from Republicans the upcoming weeks and months about the deficit or the debt or how we should worry about these interests, because it's very clear in situations like these, especially, which side they're on.
Yeah. As you point out, this is just fancy betting. And that went well, in 2006, 2007, 2008, that went well for the economy. Really fast though, I want to say it's like some people, I guess, are getting frustrated by the fact this is going on because they're like, well, why are you guys doing this? Like, stocks are supposed to be based on something, and now they're not based on anything. Man, Tesla, like Elon Musk became the most richest person on the planet over the last year. Tesla, what are they selling 10 times as many cars, 50 times as many cars? No, it's not based on anything anyway, which is my fear, or my frustration. For more political news breakdowns, interviews, stories of activism, and me trying my hardest to care about the occasional big celebrity news story, subscribe to our YouTube channel at youtube.com/The Damage Report. And you can ring the bell wherever it is so you don't miss anything.